Hello and welcome to Connected with Latham, where we discuss ideas, legal developments and business trends shaping the global economy. Thank you for joining us for our Latham & Watkins Fintech Focus podcast. I'm Simon Hawkins, a counsel in Latham's Hong Kong office, where I work in the Financial Institutions Group and the Fintech Industry Group. I'm also co-chair of the firm's Global Blockchain and Cryptocurrency Task Force. In this episode, we'll review the Singapore Fintech Festival and generally talk about what fintech updates have been happening in Singapore during 2020. Here with me today is Farhana Sharmeen, a partner in our Singapore office. Thanks for joining me, Farhana.
Hi, Simon. Thanks. Good to be speaking to you today.
The Singapore Fintech Festival took place recently, and it featured more than 600 sessions over 5 days with 1,400 speakers, more than 1,000 exhibitors, 27 international pavilions, and more than 60,000 participants from more than 130 countries. So it's an absolutely huge festival, and it's definitely become one of the landmark fintech events in the world, and most certainly in Asia. This year's Singapore Fintech Festival adopted a hybrid format, combining the 24-hour online platform with satellite events going on all over the world. Farhana, so Singapore's been a real fintech centre of innovation. Perhaps you can give us a bit of background about what's been going on the fintech front in Singapore during 2020.
Sure, Simon. Thanks. I think as most people will know, the Singapore regulators, particularly the Monetary Authority of Singapore, has been looking at the digital space for a really long time. From 2016 onwards, they had launched a massive collaborative project with tech firms, the financial institutions under Project Ubin to basically assess how digital space should be changed to cater towards financial institutions. That's finished its fifth phase, and we've seen that translated into several aspects for financial institutions in Singapore. I think a lot of people will be familiar that in 2020, Singapore commenced the operation of the Payment Services Act, which basically not only consolidated our existing traditional legislation on money remittances and foreign exchange, but also expanded that into e-wallet licensees as well as digital payment service providers. As you know, the license application has been overwhelming. MAS is still assessing and they're still reviewing the application process. But I think that was a critical thing that has developed throughout this year. It's not exactly new, but the fact that it has commenced was a significant development because that will create a wider sort of platform for different players to come into Singapore, as can be seen by the fact that there's been so many applications for the license.
And what's the driver then? So what are market participants finding appealing about the new payment services regime in Singapore?
I think it is really that Singapore is one of the jurisdictions that has very categorically embraced alternative means of financing and has come up with regulations which give you a certain degree of certainty and clarity as to how digital payment players will be treated, which I think isn't necessarily the case everywhere. But you will see in Hong Kong as well as in London and Europe that the regulators are increasingly looking at this area. So I think for players, when I speak to our clients who are looking at this space, they like the certainty, they like the robustness of the Singapore financial regulatory space, which helps them, frankly, deal with how they're going to be structuring and launching their operations, not just in Singapore, but globally.
And it gives them a good jumping off point into the Southeast Asia market.
Absolutely.
Is that another advantage? Yeah. So as well as payments, so there was an announcement just before the Singapore Fintech Festival started in relation to the new digital bank licenses. So can you tell us a bit about the digital bank licenses and what that means for digital bank services in Singapore?
Sure. Simon, as you would be familiar, the digital banking license, when it was announced earlier a few years back, it was a very exciting sort of news for non-financial institutions. It's been a long process where, they've refined the number of licenses that they ultimately granted. And they did subject the successful licensees quite vigorously. And that's why it took such a long time. And it was only on 4th of December that they announced who was being granted the license. As you'll see in Singapore, you've got the traditional financial institutions moving into digital full bank status. They're just basically leveraging off what they've historically provided. All of the banks all have their digital platforms, which, as I understand it from the festival, has the utility and usage of the platforms have actually skyrocketed. And, these are platforms which facilitate payments not just between retail to retail customers on a personal basis, but SMEs as well as customers to the SMEs. So B2B, B2C, etc. What I think the digital banking license really does is it just widens the platform and products that are available to consumers in Singapore. So you've got, non-traditional financial institutions who are now coming into this space. They can't do your traditional banking activities, but they will be able to take some degree of credit, some degree of deposits. So it's just really an alternative means that is being provided to consumers.
And there are two different types of license, aren't there? There's the wholesale license and the full bank license. Are you able to articulate the differences between the two of them?
Sure. So what we call the DWB basically can only conduct certain limited type of businesses. So they're not allowed to grant unsecured credit facilities, for example, to retail individuals. And MAS does not expect these entities to really service retail individuals or provide any degree of financial advice. So it is really more just a platform to provide some degree of deposit taking and payments.
To wholesale customers.
Correct, that's right.
And the full bank then is a full service provider of financial services to the retail segment as well, is that right?
Absolutely, that's correct.
So in Hong Kong, one of the recent complaints that's been levied about our virtual banks that we have in Hong Kong is there have been some complaints about technology risk management. So there have been some security type glitches and some technology outages where people haven't been able to log into their accounts, or they have received statements that were inaccurate. And there was a question that was asked to the HKMA through the Legislative Council just recently about that. The HKMA responded to say that the virtual banks are subject to the same level of technology risk guidelines and regulation and supervision as traditional banks. Is that the same in Singapore? Because I expect that we would see the similar sorts of teething problems when the digital banks are launched.
Yeah. So, Simon, as you're familiar, financial institutions who are regulated in Singapore all have to comply with the technology risk management guidelines. So it's expected, and part of why the license applicants needed to satisfy a certain degree of financial backing is because they need to be able to ramp up and address and ensure that they've got processes and procedures in place to be able to redress any sort of technical issues that may arise during this teething stage.
So moving on to another of the major announcements that came out of the Singapore Fintech Festival, and that was one from DBS, one of Singapore's biggest banks. It has launched or is launching a new crypto trading and issuance platform, including also a custody solution, in partnership with the Singapore Stock Exchange. To my knowledge, at least, this may be the first sort of traditional bank that we've seen come out with a full-service institutional crypto trading, security token issuance and custody solution. It was big news, and Farhana, I wonder if you have any comments on that. In particular, how has DBS managed to do this, and how does it tie in with some of the other regulatory change that's going on in Singapore, in particular in relation to the digital payment tokens regime?
Sure. I mean, I think, first of all, just to say, I think this is really exciting news, not just for Singapore, but I think globally, to have your national stock exchange tie up with one of the larger banks to make available such a platform. I mean, I think just basically underlines just how important Singapore as a country sees cryptocurrency, and that it's not going to be going away anytime soon. Basically, the new entity, which is where the Singapore Stock Exchange has a percentage in this new company that's been set up, has been granted in principle approval as an RMO, a recognized market operator under the Securities and Futures Act. So that's really the licensing regime that has been applied. This new platform really is going to be providing asset tokenization, secondary trading of digital assets, including Bitcoin. And I think also something that's baffled or was of an area of concern for regulators plus financial regulatory advisory lawyers has always been, how are they going to custodize? What are the risks that are going to be needed to be addressed in custodization of such a digital asset? But this new platform is also going to be able to provide custody services. And both the bank and the regulators have basically taken comfort in the robust governance and controls that are already in place. So I think, Simon, going back to your earlier point about even the digital bank license holders now, the fact that there is that technology risk management guidelines that, people expect all financial institutions in Singapore to adhere to, I think that's given a lot of comfort as well, to allow the bank and the exchange to take this forward.
And so the DBS platform is an institutional platform, so it won't be available to retail customers directly. Is that consistent with the MAS's policy generally, that crypto products are not quite suitable for the retail investor?
Absolutely. You'll recall that when the Payment Services Act came about, there was a lot of question whether we needed separate legislation to deal with crypto assets and trading in crypto assets. And the view was and still remains that, we've got robust legislation which addresses all of the different type of financial asset classes that can be traded, and that crypto is a category of assets that isn't really suitable yet for retail investors because there is a higher degree of risk involved, obviously. And, to sort of plug in what could potentially be seen as maybe gaps in the existing legislation, the MAS has this year also launched a consultation paper to sort of bring the ambit of digital payment token trading under a separate act, which is currently called the Omnibus Act. And that is basically to address any sort of trading across from Singapore outwards with customers in digital payment tokens. So I think what you can see is that the legislation is sort of growing holistically to look, observe, and address what are the regulatory requirements that we need to basically plug or create to facilitate trading in crypto and digital payment tokens, because I think, it's very clear that Singapore as a country just sees that as the way forward.
Fantastic. And I think that means that we're looking ahead to 2021. It's a pretty exciting outlook for fintech market participants and traditional institutions in Singapore. We're going to have the new payment services licensees coming online. We're going to see the new digital banks building out their businesses. And we're going to see DBS's crypto trading platform get started, and maybe more of those to come as well next year. So I think next year's Singapore Fintech Festival promises to be just as exciting as this year's, and definitely a lot to watch in Singapore in 2021. So Farhana, thank you so much for your insights today.
Thank you, Simon. Always a pleasure talking to you.
And thank you all for listening to this episode of our Connected with Latham podcast series. More on this topic can be found at our fintech blog at lw.com. You can subscribe and listen to new and archived episodes of Latham's podcasts on lw.com, Apple Podcasts, Google Podcasts, Spotify, or anywhere else you listen to podcasts. If you'd like more information about the topics in this podcast, please email us from links located in the show description. We hope you'll join us again next time.
This podcast is provided as a service of Latham & Watkins, LLP. Listening to this podcast does not create an attorney-client relationship between you and Latham & Watkins, LLP, and you should not send confidential information to Latham & Watkins, LLP. While we make every effort to assure that the content of this podcast is accurate, comprehensive, and current, we do not warrant or guarantee any of those things, and you may not rely on this podcast as a substitute for legal research and/or consulting a qualified attorney. Listening to this podcast is not a substitute for engaging a lawyer to advise you on your individual needs. Should you require legal advice on the issues covered in this podcast, please consult a qualified attorney. Under New York's Code of Professional Responsibility, portions of this communication contain attorney advertising. Prior results do not guarantee a similar outcome. Results depend upon a variety of factors unique to each representation. Please direct all inquiries regarding the conduct of Latham & Watkins attorneys under the New York's disciplinary rules to Latham & Watkins, LLP, 885 3rd Avenue, New York, New York, 10022-4834. Phone number 1-212-906-1200.